Price looks active. Candles are moving quickly. Volatility is expanding. But structure has barely moved. And that contradiction becomes visible when we look at session anchors. Because most of the recent movement is not creating new structure. It is interacting with existing session boundaries. And this is where the MRM structure model becomes useful. The model does not begin with direction. It begins with environment. In MRM, that environment is defined by 5 structural axes: time, volatility, position, interaction, pressure. Each axis describes a different dimension of market behavior. Time is represented by sessions. Volatility is represented by Bollinger compression and expansion. Position is defined by moving averages. Interaction is observed through boundary tests. Pressure is visualized through trendline slope. When these axes align, structure becomes readable. And right now, the chart is showing a very clear interaction between several of them. Let us begin with time, the first axis. In MRM, time is not measured by clock hours. It is measured by sessions. Asia, Europe, United States. Each session leaves behind a structural anchor candle. That anchor becomes a reference box. And those boxes create containment. For example, the March 12th U.S. session anchor formed inside the structure created earlier. It appeared between the lower boundary of the March 11th Asia session anchor and the box of the March 11th U.S. session anchor. So instead of relocating structure, the market stayed inside an inherited session container. 2 different sessions, operating inside the same structural space. When that happens, interaction density increases. Movement can appear active. But usable distance often remains limited. Because structure has not relocated yet, the market is simply rotating inside inherited containment. And this behavior continued into the following session. The March 12th Asia session anchor formed above the midpoint of the March 12th U.S. anchor. After that, price began interacting with several boundaries. The upper boundary of the March 12th U.S. anchor. Then the upper boundary of the March 11th Asia anchor. Then the upper boundary of the March 11th U.S. anchor. Eventually, the chart even reached the boundaries created by the March 5th U.S. session anchor. Notice what is happening here. Price is not simply moving. It is traveling from boundary to boundary. And this is where the second axis becomes visible. The second axis is volatility. And on this chart, volatility is visible through the Bollinger bands. The 20 Bollinger bands are expanding. The upper band is rising. The lower band is slightly expanding downward. This means usable distance is beginning to increase. But expansion alone does not create relocation, because inside that expansion we can also see compression cycles. The 4 Bollinger bands compressed earlier. Then they began expanding again. This sequence often creates a behavioral pattern. Compression first, then expansion attempts. But during that process, continuation attempts can stall quickly. Pullbacks may deepen before stabilizing, and tolerance becomes narrower. Which brings us to the third axis. The third axis is position. Position is defined by moving averages. In this case, the chart is interacting repeatedly around the 20 moving average, while the broader structure still references the 120 moving average. Moving averages create positional gravity. When price repeatedly interacts around them, movement tends to rotate, not relocate. And that is exactly what we saw on March 13th. The March 13th U.S. session anchor formed near the upper boundary of the March 5th U.S. session anchor. Price then attempted to reach the lower boundary of the February 4th U.S. anchor. But that attempt failed. Instead, price fell back. It broke below the lower boundary of the March 5th U.S. anchor and drifted toward the upper boundary of the March 12th U.S. anchor. This behavior illustrates something important: structural memory. Older session anchors remain active long after they form. Because structure is not erased when candles move away. Structure persists. which leads us to the fourth axis. The fourth axis is interaction. Interaction measures how often price touches structural boundaries. Repeated boundary interaction creates density. Density changes trading behavior. Continuation attempts begin to stall faster. Reaction speed increases. Tolerance width narrows. And traders begin experiencing more failed continuation attempts. This is exactly what we are seeing in the most recent session. The March 15th Asia session anchor formed with its candle body overlapping the March 5th US session anchor. That overlap increased structural density again. Now the market is interacting with the lower boundary of the February 4th US session anchor. Notice what this means. The chart is not operating inside a single session box. It is operating inside a network of inherited session boundaries. That is where many traders become confused, because the movement looks directional, but the environment is actually structural interaction. And this is where the final axis becomes visible. The fifth axis is pressure. Pressure is visualized through trendline slope. Trendlines do not define structure. They reveal the persistence of pressure acting on structure. When slope increases, continuation attempts accelerate. When slope weakens, continuation attempts stall more easily. Right now, the chart is showing both behaviors at different moments. Short bursts of acceleration, followed by deeper pullbacks. This is typical when several session boundaries exist close together. The environment becomes frictional. And in frictional environments, behavior changes. Distance requirements expand. Tolerance narrows. And reaction speed becomes critical. This brings us to the key idea. Many traders try to trade within a single session, but some of the clearest interaction appears between sessions. When one session anchor forms inside another session's containment, the chart often begins moving from inherited boundary to inherited boundary, not randomly, but structurally. This creates a trading environment where the usable space is defined not by candles, but by session boxes. If compression persists, usable distance remains limited. If volatility expansion continues while session containment holds, continuation attempts may stall quickly. If displacement begins replacing rotation, tolerance must widen. And if multiple boundaries remain active at the same time, holding pressure increases. These are not predictions. They are execution environment shifts. The chart may look active, but activity does not always mean relocation. Right now, several session anchors remain active simultaneously. Volatility is expanding. Interaction density is rising. And structural memory continues to shape movement. The environment is still processing. Execution conditions remain in transition.